So now we are going to discuss the case study on overhead costing. Very interesting, very easy case study, and the similar to one of the questions that we have done on under and over absorption of overheads. So this case study is on what? This case study is on under and over absorption. Under and over absorption of overheads, right? Let's try to understand this. During the half year ending interdepartmental review meeting of P Limited, cost variance report was discussed and the performance of the department were assessed. The following figures are presented. For the period of the first 6 months of the financial year, the following information were extracted from the books. Actual production overheads incurred were 34,08,000. The above amount, that is this 34,08,000, is inclusive of the following payments. The paid as per the court's order 4,50,000. Expenses of the previous year booked in the current year 1 lakh. Paid to workers for the strike period under an award 4,20,000. Obsolete stores return of 36,000. So all these amounts are included in this 34,08,000. Production and sales data for the 6 months are as under. Production is finished goods of 1,10,000. This is what you produced. Work in progress 50% complete in every respect, 80,000 units. Now it doesn't mean that 40,000 units are complete. It means the cost equivalent to 40,000 units has been incurred, right? So this 50% is what? This is your degree of completion which is given to you. Sale, finished goods is 90,000 units. Machine worked during the period was 3,000 hours. At the end of the preparation of revenue budget, it was estimated that a total of 50,40,000 would be required for the budgeted machine hours of 6,000 as the production overheads for the entire year. Now this is what? This data is what? This data is your budgeted data, that what will be the budgeted production overheads and what will be the budgeted machine hours. This is what is given to you. During the meeting, a data analytic report revealed that 40% of the over or under absorption was due to defective production policies. So what is this? Is this a normal reason or whether it is an abnormal reason? Sir, this is an abnormal cost. That whatever will be the under or over absorption, 40% is your abnormal reason. And abnormal reason means that part of the cost should go where? The abnormal cost will always go to costing, profit and loss account, right? And the balance was attributable to the increase in cost. You were also present at the meeting. The chairperson of the meeting has asked you to be ready with the following for the performance appraisal of the departmental heads. Let's see what is there. How much was the budgeted machine hour rate used to recover the overheads? Now, how do you calculate the machine hour rate? The machine hour rate is budgeted overheads. Can we say this is how we calculate budgeted overheads divided by budgeted machine hours divided by budgeted machine hours? This is how we calculate. Yes, sir. So what are the budgeted overheads given to you? The budgeted overheads are given as 50,40,000 for a budgeted machine hours of 6,000. So it will be 50,40,000 divided by 6,000. So 50,40,000 divided by 6,000, that comes to 840 rupees. This will be your machine hour rate. Remember the absorption part. When we calculate the machine hour rate, what we do? We use the budgeted data, because what has happened in the past period, we calculate according to that particular thing, right? Next, how much amount of the production overhead has been recovered? That means absorbed up to the end of the half year. How do you calculate the absorbed overheads? Absorbed overheads. What is the base here? The base here says for every 1 machine hour, your absorption rate is 840. So what is your actual number of hours which are worked? That is 3,000 hours. So how many overheads you are absorbing? You say the machine has worked for 3,000 hours. Yes, sir. The machine has worked for 3,000 hours. And according to the previous data, according to the budgeted data, what we are saying is that for every 1 hour, my overheads is 840 rupees, right? So for 3,000 hours, what will be it? That will come to 25,20,000. Option A, right? Now, what is the amount of over or under absorbed overheads? Now to calculate the under or over absorbed overheads, what you need? One, you need actual overheads. One thing that you need is actual overheads. Second thing that you need is absorbed overheads. Right? Absorbed overheads we have just calculated, that is 25 lakh 20,000. Now we will calculate the actual overheads. Sir, can we take 34 lakh 8,000 as actual overheads? No, we cannot take that. Why? Because when we are taking the actual overheads, I told you that actual overheads we have to take related to the current period and related to the production. So you have to remove all these items from these actual overheads because this is related to the previous year, not relevant. Paid as per the court's order for the strike period, obsolete stores written off, all this is what? All this is for the abnormal reasons, not for the normal reasons related to your production. Is that clear, everyone? So the actual overheads will be what? 34 lakh 8,000 minus 4 lakh 50,000 minus 4 lakh 20,000 minus 36,000. Right? So this will come to 34 lakh 8,000 minus 4 lakh 50,000 minus 4 lakh 20,000 minus 36,000. That comes to 20. Wait. Some mistake seems to be there. 34 lakh 8,000 minus 4 lakh 50. Okay. Minus 1 lakh also. Minus 1 lakh also. Right? Minus 1 lakh minus 4 lakh 20,000 minus 36,000. So that comes to 24 lakh 2,000. So this is the actual overheads that you will take for this purpose. Right? So the actual overheads here will be 24 lakh 2,000. So 1 lakh 18,000. Now this is what? This 1 lakh 18,000, whether it is your under absorption or whether it is over absorption. Sir, it is a case of over absorption. That means your actual overheads are 24 lakh 2,000. Actual overheads represent what? The actual overheads represent the cost that should be recovered from the customer. That should be recovered. But what actually you are recovering? You are recovering 25 lakh 20,000, sir. Is that clear? So it is a case of 1 lakh 18,000 as over absorbed overheads. Now, next they're asking for what is the supplementary rate for the apportionment of over or under absorbed overheads over WIP, finished goods and the cost of sales. Now, the supplementary rate is to be calculated for the over absorbed overheads. That means, should I calculate the supplementary rate for 1 lakh 18,000? Yes or no? Should I calculate the supplementary rate for 1 lakh 18,000? Yes or no? No, sir, I will not calculate for 1 lakh 18,000. Why? Because supplementary rate is calculated when? The supplementary rate is only calculated if the over and under absorbed overheads is due to the genuine price rise or fall. Yes, but here in this case, out of 1 lakh 18,000, we say the 40% is due to abnormal reason. 40% of this 1 lakh 18,000, 40% that comes to 47,200. This should go to where? This should directly be going to costing, profit and loss account because it is due to the abnormal reason. It is due to the defective planning. So it should directly go to costing, P&L. The remaining 70,800, this remaining 60%, that is 70,800. For this 70,800, we will calculate what? We will calculate supplementary rate. Now, how will you calculate supplementary rate? You will say over absorbed overhead 70,800 divided by what? Divided by the closing stock of WIP, finished goods and the sales. Sales is 90,000 units. For WIP, what will you take? You will take 80,000 multiplied by degree of completion. That is 40,000 units you will take for WIP. Yes or no? Yes, sir. For finished goods, what will you take? Sir, we will take 1 lakh 10,000 for finished goods. What I am saying, we have to take what? We have to take the closing stock of the finished goods. Closing stock. What will be the closing stock? This is not the closing stock. This is the number of units of the finished goods that you manufactured. Out of this 1 lakh 10,000, 90,000 is already sold. So what is left is 20,000. So what will you take here? So you will take here the WIP of 40,000, finished goods stock of 20,000 plus the sales of 90,000, right? So divided by 1,50,000, that comes to 0.473. 2. This will be your supplementary rate. So please be very careful with the calculation of supplementary rate. Be very careful what should be taken to WIP. Do not forget to consider the degree of completion. At the same time, when we are taking here this part is important, that here you have to take the closing stock of finished goods. Here we have to take what? Closing stock of FG. This is what we have to take. So closing stock of FG, how we have calculated that 1,10,000 units were manufactured. Out of that, 90,000 units have been sold. That means we are left with how many units? We are left with only 20,000 units. Is that clear? Yes, is that clear, everyone? Okay, so we have calculated the supplementary rate. What is the last MCQ? The last MCQ says, what is the amount of over or under absorbed overheads apportioned to WIP, right? So for that, what will you take? WIP, number of units, 40,000, that is equivalent units, multiplied by this supplementary rate of 0.472. So that comes to 18,880. 18,880. This is your amount to be taken to WIP. Now here they can ask you, instead of WIP, they can ask you FG also. They can ask you the cost of sales also. Anything they can ask you, right? So that means the number of units multiplied by the supplementary rate. Is that clear, everyone? So with this, we are done with this case study. Very important case study, and as a practical problem also, this under and over absorption of overheads is one of the most important topics, right? So after every video, I request all of you to please go through with the case study on your own also, because when you will sit back, when you will do it on your own, you might have certain queries that might crop up in the mind, so you can ask your queries, right? So with this, we are done with the overheads case study. So in this video, we are going to discuss about the case scenario on activity-based costing, another very interesting chapter, but do not watch this if you have not done overhead costing, right? So always I say that before you do activity-based costing, you must be done with the overhead costing, only then you will be able to understand activity-based costing. Okay, let's try to understand this case scenario. A similar case scenario you have done in the practical part, but still we will solve it and see how the case scenario is to be tackled, right? Okay, the sales department of A Limited is analyzing the customer profitability for its product Z. It has decided to analyze the profitability of its 5 new customers using activity-based costing method. It buys product Z at rupees 5,400 per unit and sell to the retail customers at a listed price of 6,480 per unit. The data pertaining to 5 customers are given as follows, right? So 6,480 is what? This is your selling price, and this 5,400 is what? This is your purchase price. This is your purchase price. Fine. The further data is given that what is the number of units being sold to A, B, C, D and E, the 5 customers. Listed selling price is what? The actual selling price is what? That means we are giving the discount to some of the customers. So what is the actual selling price? Then number of purchase orders, number of customer visits, number of deliveries, kilometers traveled per delivery, number of expedited deliveries is given to you. After a detailed analysis and computation, the following activities has been identified and the respective cost has been calculated. So these are the 5 activities that they have identified, and these are what? The cost driver rates are directly given to you now, right? You don't have to calculate CDR. The CDR is directly given to you. Clear? That's a very good thing, sir. The CDR is directly given to us. You have been assigned the following task of computing the different cost information for the managerial decision making. Okay, let's see what is the information given. Now they have given this data for the 5 customers and they have given us the CDR, right? And it's a question where we have to apply only activity based costing. The absorption costing is not what they are asking. They are asking only about activity. They say how much cost on the customer visit is incurred on customer E, right? Now, if you look at the customer visits, the CDR says for every customer visit, there is a overhead cost of rupees 3,600. The CDR tells you what? The CDR tells you that for every 1 unit of that activity, what is the overhead cost being incurred? So I am saying that for every one customer visit, the cost being incurred is rupees 3600. Yes, sir. So for customer E, what is the number of customer visits? That is 3. So what will be the cost here? The cost here will be 3 multiplied by 3600. Right? So 3600 multiplied by 3, that comes to 10,800. That is option B. Very simple. The CDR is given. The CDR implies what? The CDR implies that for every one customer visit, what is the cost? Right? They say for every one customer visit, the cost is 3600. Now they are asking about customer E. The customer E, number of customer visits are what? 3. For one visit, cost is 3600. So for 3 visits, the cost is 10,800. Very simple. Let's come to the second one. They say, what is the cost of goods sold for customer D? What is the cost of goods sold? Now, what is this cost of goods sold will have? The cost of goods sold here means what will be the purchase cost, because that is the only cost in the cost of goods sold. You do not have the opening stock. You do not have the closing stock. The only thing that you have is what? The purchase cost. For customer D, what is the number of units that you have sold? 7,500. What is the purchase cost? Rupees 5,400 per unit. Right? So cost here will be 7,500 units. 7,500 units multiplied by rupees 5,400. 7,500 multiplied by 5,400, that comes to 4 crore 5 lakhs. Right? So this is option D, the cost of goods sold. Is that clear? Right? Okay. Otherwise, cost of goods sold, how do we calculate? Opening stock plus purchases minus closing stock. There is no opening stock. There is no closing stock. The only thing that you have is the purchases. Next, how much is the cost of expediting delivery for customer A? Now, if you look at the CDR says for every one expedited delivery, that is a fast delivery. Expedited delivery means the fast delivery, the quick delivery. For this, for every one delivery, there is a cost of 13,500 rupees. Now, for customer A, how many expedited deliveries are there? Number of expedited deliveries, sir, 0. So what will be the cost? Obviously, the cost will be 0. So cost will be 0. That is option D. Is that clear, everyone? Coming to the fourth one, compute the customer level operating income for each of the customer. Now, what is operating income? How do you calculate operating income? Operating income here means sales minus COGS minus all other operating cost. All other operating cost means the cost of these 5 activities. What is the order taking cost? What is the customer visit cost? What is the delivery cost? What is the product handling cost? And what is the expedited delivery cost? Clear? So this is what we have to calculate. The operating income for customer A, the operating income, next part, if you read the fifth part also, they say the customer level operating income for D and E. So that means we will have to prepare a statement now for customer A, customer D and customer E. They are not asking about B and C. So do not prepare for B and C. Prepare only for A, D and E. That's all what we need. Right? So whenever you are solving a case study, sometimes you will have to read. You must read actually, not sometimes. Every time you must read all the MCQs. What is the requirement? Sometimes your answer will be framed according to the requirement of the question. Clear? So let's prepare it for customer. Which customer, sir? Let's prepare it for customer A. Right? Customer A, customer D and customer E. So we'll start with what? We will start with the value of sales. Okay, let's start with the sales. So what is the sales here? For customer A, they say the number of units sold are 4,500 and the selling price is 6,480. Right, so it will be 4,500 multiplied by 6,480. For customer D, 7,500 units at 6,264. 7,500 units multiplied by 6,264. And customer E, 12,750 units at 5,832. right? 12,750 units at what price? What price? 5832. 5832, right? So let's try to solve this. 4500 multiplied by 6480, that comes to 2 crore 91 lakh 60,000. 2 crore 91 lakh 60,000, right? Next is 7500 multiplied by 6264, that comes to 4 crore 69 lakh 80,000. And last one is 12,750 multiplied by 5832, that comes to 7 crore 43 lakh 58,000, right? So these are the values that we are getting for this. Is this clear? This is sales. Now from the sales, what I will subtract? I will subtract my COGS. What is COGS? COGS is nothing but your purchase cost. How will you calculate purchase cost now? 4500 units multiplied by 5400, because 5400 is the purchase cost per unit. 7500 multiplied by 5400 and 12,750 multiplied by 5400. Let's see. 4500 multiplied by 5400 will come to 2 crore 43 lakhs. Next, 7500 multiplied by 5400, that comes to 4 crore 5 lakhs. Next is 12,750 multiplied by 5400, that comes to 6 crore 88 lakh 50,000. Is this clear, everyone? Yes. Easy. Very easy, sir. Extremely easy, sir. Next, now we have to take this cost now, the order taking cost, right? Order taking cost is rupees 4,500 per purchase order. For customer A, how many purchase orders are there? 15. For customer D, 25. For customer E, 30. So minus ordering cost. Minus will be ordering cost. So how many orders for customer A? 15 orders. For every one order, what is the cost? For every one order, cost is 4,500. Here for customer D, it is 25 orders. So 25 multiplied by 4,500, and for customer E, it is 30 orders. So it will be 30 multiplied by 4,500. Right, so 15 multiplied by 4,500, that comes to 67,500. Then 25 multiplied by 4,500, that comes to 1,12,500. Next is 30 multiplied by 4,500, that comes to 1,35,000. So this is your ordering cost. Next activity, customer visits. For customer visit, they say it is 3,600 per customer visit. For customer A, number of visits 2. For everyone, 3,600 cost, and for D it is 2, it is for 3, right? For customer E, 3. So minus customer visit cost minus customer visit. So for customer visit, it will be 2 visits. For every one visit, the cost is 3,600. Here for D also it is 2 multiplied by 3,600, and here it will be 3 multiplied by 3,600. So it will be 7,200. For D also 7,200. For E it is 10,800. Clear? Customer visit cost done, sir. Next we have the deliveries cost, that is 7.5 per delivery kilometer traveled. How will you calculate now? Per delivery kilometer traveled. For this, what you have to take is number of deliveries multiplied by the kilometers traveled per delivery, right? Kilometers traveled per delivery multiplied by 7.5, because 7.5 is not per delivery, it is per delivery kilometers. Read this together. It is per delivery kilometers. For every one delivery, what is the number of kilometers traveled on that 7.5? So if they are doing for customer A 10 deliveries, so 10 multiplied by 20 kilometers per delivery multiplied by 7.5, right? Okay. This is your deliveries cost. So I'll subtract here minus delivery cost. So delivery cost for A will be 10 deliveries, 20 kilometers per delivery multiplied by 7.5. For D, it will be 40 multiplied by 10. 40 deliveries, 10 kilometers per delivery multiplied by 7.5. And for the last one, it will be 20 multiplied by 30. So this is another important point where you have to be careful, sir. Right, so this comes to 200 multiplied by 7.5, that comes to 1500, 1500. Then 400 multiplied by 7.5, that comes to 3000. And the last one is 4500. So this is your deliveries cost. Next one, product handling 22.5 per case sold. So number of units sold you are already having. This is the number of units sold. For every 1 unit sold, the product handling cost is 22.5. Okay, fine, sir. So we'll subtract here handling cost. So he'll take handling cost. For customer A, how many units are there? 4500 units they have sold. So 4500 multiplied by 22.5. Right, and for customer D, it is 7500 units. So 7500 multiplied by 22.5, and here it will be 10,000 no 12,750 units. It is 12,750 units multiplied by 22.5. Right, so let's see, 4500 multiplied by 22.5, that comes to 1 lakh 1,0250. Right, so 7500 multiplied by 22.5, that comes to 1,68,750, and 12,750 multiplied by 22.5, that comes to 2,86,875. Right, so this is your handling cost. Last one, the expedited delivery is 13,500 per delivery, and see the customer for whom it is being done. It is only being done for customer E. Right, so expedited delivery cost minus expedited deliveries that is 13,500, because there is one delivery only, so 13,500 per delivery. That's it. Now if you solve this, what you will get from this, you will get your operating income. That is what they are asking for. That is operating income. So operating income basically is what? Sales minus COGS, gross profit minus all the operating cost. All the operating cost is what? The operating cost in this case is ordering cost, customer visit, deliveries, product handling cost, expedited, all that is related to your operations, all that is related to the selling of the product. Right, okay, let's try to calculate it. 2 crore 91 lakh 60,000 minus 2 crore 43 lakh minus 67,500 minus 7,200 minus 1,500 minus 1 lakh 1,250. So that comes to 46 lakh 82,550. This comes to 46 lakh 82,550. So do we have the answer for option A? For customer A, 46 lakh 82,550, that is option B. Now for D and E we need to calculate. Let's calculate for D. For D it is 4 crore 69 lakh 80,000 minus 4 crore 5 lakhs minus 1,12,500 minus 7,200 minus 3,000 minus 1,68,750. So that comes to 61,88,550. Now let's calculate for customer E. 7 crore 43 lakhs 58,000 minus 6 crore 88 lakh 50,000 minus 1,35,000 minus 10,800 minus 4,500 minus 2,86,875 minus 13,500. So that comes to 50 lakh 57,000. Wait, this comes to how much? This comes to 50 lakh 57,325. Right, now let's see the answer here. Yes, option number D. Clear? So always whenever you are solving any case study, go through the MCQs, go through the questions what they are asking, because sometimes the answer might not need all the calculations. Here the calculation regarding B and C were not required. So why we are going to waste time on the calculation of B and C? If you will look in the module solution, now they have solved for all the customers. Why? There is no need for that. Right? Because in the MCQs, you are not going to show your workings. In the MCQs, what you have to show is only the right answer you have to mark. Right? So please be very careful. That is the purpose of this particular case study series and all, that you are able to understand that how to attempt the case studies. Right? How to judge the answers, how to read the case study, how to interpret the case study, which is very, very important part. So with this, we are done with the case study on activity-based costing. So this is your complete answer for the fourth and the fifth part. You can pause the video, write down the answer, write down all the calculations and all. Right, written practice is must for all of you. So with this, we are done with the activity-based costing. In the next, we'll do the cost sheet. Thank you so much.